Good afternoon and welcome to NYFP. Today I'm joined by Ben Willis of Sunrise Securities. Hi Ben, thanks for joining me today.
Always my pleasure.
Well, in midweek trade, we're seeing the major U.S. stock averages trade in positive territory. We had the Fed yesterday and we had some of the jobs data this week come out today. What is the sentiment like right now?
This is what I call a head-scratching day for a trader because the economic data that hit the tape this morning would have told you the market would be lower. But the perversion of the market today is that the data was bad enough that it's going to force the government's hand, particularly the Fed, to do something additional, another quantitative easing, if you will. I don't know what they'll call it, but that's the idea behind the rally today because the economic news was so bad, it's the Fed is going to have to do something, so we rallied on it. Just one of those odd days.
Well, Ben, looking ahead to Friday, we will be getting the August jobs report. How are you positioning yourself for that?
Well, it's obviously it's the most important number on a month-to-month basis, and the ADP number was again this morning was disappointing. It was a downward revision, and the number is below 100. So I think you have to diminish expectations of the Fed number. But the way this tape has been trading, you would think the market would trade off, but the possibility lies in the fact that if the jobless claims numbers are the unemployment number stays or goes higher, and the numbers aren't pleasing, the market still has the ability to go up, because the belief is that the government will be forced to do something in the economy that they are not doing right now.
And speaking of which, Ben, as we round out the month of August and head into September, a lot of the issues, especially from the Eurozone, they have not been resolved. So how are you keeping a handle on those concerns?
Well, September's, for the market itself, is a terrible month historically. It's one of the lowest rate of returns historically. But what's interesting about September is we have a lot of economic data, particularly coming out of Europe, with a legal action in Germany on the 7th, then a vote that's been delayed into the 20th of the month, plus our own FOMC meeting will be a 2-day meeting, expecting something to come out of that. So September should be a very, very interesting month, to put it mildly. And with the volatility index where it is, you can see 200, 300-point swings in a day like if they were nothing. So it's a little hard to be set for a trader other than to expand your parameters and expect volatility.
Okay, Ben, well, thank goodness August is over and looking forward to September. Thanks for joining me today.
My pleasure.